So, what if the real secret to Warren Buffett's incredible success isn't some complex financial formula, but a simple, timeless philosophy? Well, today we're going to unpack the core principles that made him a true legend, and you'll see how these ideas aren't just about our wallets, they're about our lives.
First things first, let's talk about the #1 mistake that trips up millions of investors. I'm talking about everyone from total beginners to seasoned pros. It's a really simple error in how we think, but, getting this one thing right, it unlocks the entire Buffett philosophy.
It sounds almost too simple, right? Rule number 1, don't lose money. Rule number 2, don't forget rule number 1. And yet, this is the one rule that gets broken every single day on Wall Street. So the real question is, how do so many people get this fundamental idea so incredibly wrong?
Well, it really all comes down to a fundamental misunderstanding of what the stock market even is. It's a trap, and it's so common that most of us fall right into it without even realizing what's happening. And there it is. It's hyperactivity. It's this constant urge to just do something. Because trading is so easy and cheap these days, people treat the stock market like it's a giant casino, constantly moving chips around, betting on red or black. But Buffett is crystal clear on this. All that frantic activity, that's not investing, that's just gambling.
Okay, so if being a frantic trader is the big mistake, then what's the solution? Well, it's a profound shift in your perspective. You have to stop thinking like someone who just plays with stocks and start thinking like someone who actually owns a business. And just look at the difference here. On one side, you have the stock picker. They are obsessed with the price on the screen. They're constantly asking, what's the crowd doing? And getting totally overstimulated by all the noise. But the business owner, they couldn't care less about the daily chatter. They are focused on the real value of the business itself. They think for themselves, and just like Buffett does from Quiet Omaha, they actually appreciate the lack of stimulation.
This quote really just gets to the heart of it all. I mean, think about it. If you bought a piece of a truly fantastic business, why would you care what the price is day to day? You own a real, productive asset. A true owner wouldn't panic if the market closed for 5 years. They'd be perfectly happy just letting the business do its thing. Now, you might be thinking, okay, to do this, I must need a genius-level IQ, right? But Buffett insists that's not it at all. See, the most important quality for an investor is an intellect. It's something much, much rarer. The right temperament.
So what does he mean by temperament? It's really all about emotional stability. It's the ability to think for yourself and not get swept up in the panic or the euphoria of the crowd. It's not a business of taking polls to see what's popular. It's a business where you actually have to think.
This incredible idea comes straight from Buffett's mentor, the legendary Ben Graham. Your success has absolutely nothing to do with popular opinion. You're not right because the crowd is cheering you on. You are right because your facts are right, and your reasoning is sound. That's it. Period.
But having the right temperament isn't enough if you're making decisions based on bad reasoning. And that's where Buffett's next core principle comes in. It's the crucial discipline of knowing your own limits, what he calls your circle of competence.
Buffett uses this absolutely brilliant baseball analogy to explain this idea. See, in baseball, if a perfect pitch comes right over the plate and you don't swing, the umpire yells, "Strike." That's a mark against you. But investing, it's not like that at all.
So picture this, you're standing at the plate. Every single day, thousands of companies are pitched to you at all different prices. And you know what you can do? You can just stand there and watch them all go by. You don't have to swing at every single one. You can just wait and wait and wait for that one perfect pitch. A business you completely understand at a price that makes total sense. And only then do you swing.
And that patience, that is your single greatest advantage. For 30 years, think about that, 3 decades, Buffett famously avoided tech stocks. It wasn't because he thought they were bad companies. He just openly admitted, you know what, I just don't understand them. Staying inside his circle made all the difference. Now that discipline of waiting for the perfect pitch, well, that leads us directly to the engine that drives this entire philosophy. And that's the awesome compounding power of patience. This is probably Buffett's most famous analogy of all. He says building wealth isn't something that happens overnight. It's like starting a small, wet snowball at the very top of a very, very long hill. And what are the 2 critical ingredients? You need the right kind of snow so it'll stick, and you need that long, long hill.
And this right here, this is what that long hill actually looks like. It's the magic of compounding in action.
your returns start earning their own returns. Just look at how the growth is pretty slow at first, almost unnoticeable. But over 20 and especially over 40 years, that snowball effect really kicks in, and you get this dramatic, exponential growth. The only trick is you have to start early to give yourself the longest runway possible.
But, when you really get down to it, these ideas are so much bigger than just money. The principles of patience, of independent thought, of long-term focus, they don't just build wealth. They really build a framework for a good and meaningful life.
Buffett learned from his mentor, Ben Graham, who he called a wonderful human being, that generosity really matters. He always emphasizes doing what you love with people you love. He truly believes that being happy actually helps you live a long and successful life. And crucially, it's about avoiding negative things like grudges that just weigh you down for no reason. This entire philosophy is really built on a bedrock of long-term optimism. I mean, even in the absolute depths of the Great Depression, John D. Rockefeller was reminding people that prosperity always returns. It's not about being blind to problems, it's about having the courage to bet on the future, knowing that human progress is just this incredibly powerful force.
So, as we wrap up, it really all boils down to this one simple question for you to think about. Are you truly investing in businesses for the long haul? Or are you just playing the market's game? Because the answer, as Warren Buffett's life shows us, could change everything.